2025. I'm Mark Gardner. Just a quick note, this is general advice only. Please make sure you consult a professional before taking, taking any positions. But now, look, last night overall, the US investors really gave or taught global investors a lesson in how to climb the wall of worry, basically, and how to chuck on those rose-coloured glasses. So we had. Been reading through this morning. Everyone's pretty much already, said it'll be a short shutdown. It actually helps Trump progress the job cuts that he wanted to do anyway. It'll have limited effect on the economy, blah blah blah, but probably means more rate cuts. So if you ever want a lesson in how to remain optimistic no matter what. Just have a look at US investors at the moment, because hundreds of thousands of people losing their jobs, and billions being wiped off the economy. Apparently a good thing, because we're going to get more rate cuts. And look, there is an element of reasoning behind that, because the indices themselves are made up of a bunch of companies with the highest concentration in the top stocks these days that really probably don't mean, and the little guy doesn't mean a hell of a lot at the end of the day. They're all chasing AI and solutions that will probably see those people out of their jobs anyway. So it is it's quite remarkable. I mean, you've just got to admire it more than anything else. Because normally I sort of tend to try and err on the side of highlighting the risk, particularly to clients, because I don't think advisors do that enough. They tend to be a little bit too default bullish. But even I'm at the moment, I know that this thing's overvalued. I know that there's like 50 different reasons why we shouldn't be here, but you can't fight it. You just cannot fight it as it stands at the moment. And it's silly to fight it, because, no matter being right isn't the point of markets. Making money is the point of markets. And you can be right eventually, but you can be wrong for a very long time before that happens as well. So, I really thought September, October would be an occasion to pull out the bear suit. And the best thing I've done for the last 6 weeks is just shut my mouth, basically. Aussie market was off yesterday because we obviously got the shutdown in real time. So it was about sort of 2 or 3 o'clock. And everyone was going, will they, won't they? Whereas US press was like, yesterday morning was like, yeah, they're shutting down. So I'm not entirely sure why there was any conjecture around it from financial press in Australia. Probably just, I suppose the uncertainty probably, is better clickbait than the actual story. I would expect a bit of a bounce back in the Aussie market today overall. And as you can see here, look at this. The Dow is up small. I think the transport index got hit. But like S&P up 0.34. These things were down 1%. Like that's a 1.5% plus recovery in the NASDAQ last night from where futures were when we left. So I think it'd be disappointing if the Aussie wasn't up at least. I think the SPI futures are up 0.5%. I think we should be up at least 1%. I think manufacturing numbers in China yesterday were a little bit better than expected as well. And we saw that rally in precious metals happen again in the States. Still pretty happy generally with the switch we've made. We were here at MPC, we were so overweight in silver, platinum, gold, and copper particularly. So still very happy, despite the fact that it did bounce back overnight. To flick into healthcare, and that's the reason why you can sort of start to see the fact that Democrats have dug their heels in, the fact that Eli Lilly or Pfizer have gone to the White House and kissed the ring and sort of try to do a bit of a deal. That it really does feel like that bottom's forming there. My favorite stock at the moment, Tesla, up another 3% overnight. And these guys, largely unchanged, but. And Micron heading higher. We were that was one of the global alpha recs we bought about 3 odd weeks ago, and hit our price target up about 35% pre-earnings. Actually, ended up not taking it through earnings. So a little bit of recovery in these guys. They've been hit a little bit. Netflix was down because Elon, I don't know what Elon's issue is, but he urged his followers to cancel their subscriptions in protest of the platform's content. Elon, just make your Optimus robots and your cyber taxis, and please just stop being on your own social media platform, for the love of God. Because that stock would probably be up about another 50 odd percent if he was a touch more silent, I would expect. But that, I mean, in a way, I suppose that provides the opportunity, I guess. So just a quick reminder from these stats I pulled yesterday, Octavio Costa, I think I kind of stole these stats off, who's on Twitter. You should go and follow him. He's got some great information out there. I modified it a little bit, but credit where credit's due. It's great. But look, I mean, as you can see here, markets generally, particularly since 1990, it's not a bad thing. The market, since 1995, 1996, we rallied every time the government shut down. So, and then 2018, we were down on a 12-month basis and ups. So, look, essentially, the US is right. It's not a big deal, and the wall of worry, as they describe it. I mean, these at the moment, I think there is no wall of worry. It's more like they're just stepping over, the gutter of worry as it stands. It's as I said at the start of the podcast, quite incredible. So I mean, look, I still wouldn't be. If you're going to be buying, I'd still be sticking to those, those strong thematics. The defense stocks, I think precious metals is probably risky buying right here, right now. I think you'll get a pullback once the government comes back into, once they sort this out. They'll probably sort it out over the weekend. Let's face it. There'll be 2 or 3 more tantrums from Trump and his followers, and then they'll do a deal. They always do. And so, you'll probably be coming back in, say, Monday to being, I mean, any prolonged shutdown is not going to be good, because like they're looking at furloughs of things like air traffic control. I mean, disaster relief, obviously you need it. But I mean, it's more of but air traffic controls, that's got to be a huge thing. And obviously they're looking at using money from the big beautiful bill that was supposed to be used for innovation to pay the military. So a little this is going to, I mean, then that's going to obviously suck funding out of things like like Stargate and stuff like that. Like it's all these critical mineral buying. So another one actually last night, antimony or antimony. I don't know which pronunciation it is. Apparently the Queen's English, it's antimony, and it's antimony in Australia and the US. But we had US US antimony rally about 21 odd percent last night. And that sector's really running hot at the moment, and it's sort of a bit of a defense theme, but also critical mineral and many other things, but used in artillery and stuff like that. So there's a bunch of Australian antimony miners that are looking in really good shape, that are really tiny market caps overall, really. And you got the likes of TMG, RMX. We've got UAMY in the US at the moment, because it's those ones are probably a little bit too small for our clients in particular. But if you love your junior mining caps, go and check it out. Go and check out the space. Agro ASX is very good. Go and have a look at his feed on Twitter, x.com. He's got a lot of great information on it as well, but it really is starting to really is sort of starting to play out that theme. Nike reported well, stronger than expected results and revenue, early progress in its turnaround plan, despite a bunch of headwinds overall. And you probably don't. That turnaround plan was only like 1 or 2 quarters ago. That's super swift, and you would expect that a company like Nike's going to have major issues with tariffs, and clearly not. I suppose when you're making Air Jordans for $3 and shipping them into the States at 100% tariff and then selling them for 300, it doesn't really make a huge amount of difference, I suppose. So obviously this shutdown as well. I mean, economic numbers, no idea where they're going to come out. We will likely see delays because I think no one's talking quick resolution at this juncture in terms of like today or tomorrow. I think most of what financial press and financial news channels I watched this morning have basically said that something might be done over the weekend or whatever. But they've actually Congress has gone home for a Jewish holiday for the last 2 days anyway as well. So, I mean, maybe it is a little bit prolonged. And, in terms of when I say prolonged, like early next week. And so that's really, that's a factor essentially in terms of delaying it. Given there's I believe there's they're not really supposed to be working on those days, particularly if they're devout Jews. I don't know how many of them are, what the percentage is in Congress, but anyway, free webinar series coming up next Tuesday, October the 7th. 12 p.m. Sydney time. We will go to daylight savings this weekend, which means the US will close a little bit later, and then they will come off daylight savings in a couple more weeks, and then we're really going to have the US session. This is going to be a difficult podcast to do. It'll almost be live as the market shuts, and we'll have the US market shutting around about 8 o'clock. So the security super cycle, unfortunately, a couple of the ASX picks have been on an absolute tear. So in preparing the webinar, EOS and DroneShield were two of the picks, but I don't know how I'm going to go, justifying that with DroneShield up about 50% and EOS up about 40% in the last 2 weeks. So there's been a lot of changing of slides so far, but there are some other plays. It's not just strictly defense companies. There's a lot of other things that, on the fringes that you can essentially buy that tack onto the thematic, like that occur under geopolitical pressure as well. So the last webinar we had a couple of really good results on a few stocks that we picked in that last one, particularly Vertiv and Oklo. I think Oklo's up about 60% plus. Vertiv had a huge jump last night. It's involved in power and power management for those data centers, is up about 30%. That was around about a month ago tomorrow. So yeah, there's there will be some ASX picks, but there'll be a fair bit of US stuff as well. And AI automation and robotics will be next month as well. I will chuck the registration pages in the comments, and sign up, and we can and get a couple of free stock picks. That really wraps it up for today. I think it'll be a bit of a storm in a teacup, this whole thing, and we'll just see if the ASX can get its game on and start to show a bit of bullishness, and do a little bit of catch up, and as I say, I'll try to get an update on when these economic numbers are going to be coming out, because payroll is obviously pretty important, and there's no real news out there on the wires at the moment as to when it's going to be out. So have a great day, everyone, and we'll speak again tomorrow.